Good afternoon, good evening, and welcome to the webinar on bullion. We are going to quickly have a discussion on the situation with gold and silver and maybe a few other precious metals. Keep this crisp and short if possible. And before we start, the usual disclaimer, this is not financial advice, and this is only for information and educational purposes only. Please do your own due diligence before you make any investment decisions. um, my name is Dr. Musa. I'm also a doctor, apart from a market participant for the last 20-25 years. Welcome back to those of you who know me about the market reviews that we do. Yesterday we did an India market review. Today we are doing a bullion market review. We'll do some commodity reviews and forex reviews in the coming few days over the coming weekend. If you'd like to get updates and keep in touch, you have the contact information on the screen. Feel free to get in touch. WhatsApp is preferred. Right. So having said that, let's jump in. What you should be able to see on the screen right now is the price of, it was silver, but now I'm switching to gold. And this is international gold, or as traded on some of the global exchanges, which very closely tracks the price of gold in the physical market. Right? Now, this is there are different charts that we can see, but just for the sake of convenience, he's been doing a lot of studies on this chart. No particular reason for this particular symbol as such, but it's just easy and popularly and easily available. All right. So those of you who have been in touch and you know what my views on gold have been, you know that I have been calling out a top on gold for quite some time. It was a bit premature at some point, right? But anyhow, things have panned out as expected. So if you look at the gold chart on a longer term basis and using the weekly format, right? Obviously, we all know that gold has risen quite a lot, especially in the last 2 years. This is in dollars per ounce. I will be coming to the India rupee per 10 grams chart in a little while, but there's an important distinction to be made and to be understood before we get into the Indian pricing. So as you can see from this chart, from 20, we had done a very long, intensive and extensive discussion of gold, which took more than just gold, over more than half an hour, 2-3 years back, and explained the big multi-decade setup of gold. If anybody is interested, do let me know, or we will do one more again. But basically, to highlight here that from 2020 to 2023, in dollar terms, gold really did not do anything much. It stayed between 1,700 to 1,900 dollars per ounce. And then in February 24, gold broke out of that range. And from there, it has gone from 2,000 to almost $6,000 per ounce in just a matter of 3 years, right? Or 2 years, actually. And people are really looking at, okay, is this going to go up? And what more can we expect, et cetera, et cetera. Well, the short answer is obviously we know what happened, but gold was showing, and this was something that I was posting on my groups of discussion. If any of you are interested, do let me know. We'll add you to the list. On that, gold was getting extremely overstretched and overbought, as we say in technical terms, had been really going up far too soon and far too fast, right? And without getting into too much technical jargon, um, there was what is called a bearish divergence that was happening in the weekly charts, and the RSI on the monthly chart had never ever gone to those extreme levels for gold, which was almost at 95 on the RSI levels. And this is like we're talking about over the last 25 plus years. Uh, so a pullback simply on the basis of technical understanding was expected, and that did happen. Gold peaked on 29th Jan 26, and then the very next day there was a 9% fall. Most unexpected. Most people thought, okay, blip in the ocean, but for those of us who are following this very, very seriously and very, very carefully, this was sort of long time coming. Had been caught on the wrong foot for some time, especially when it came to around $5,000 an ounce, and said maybe there's a top heavy pattern here. But then typically that's what markets do. They will, rush beyond, um, and then just simply decide to correct. And what's most interesting, especially in the current scenario, we are doing this on the 26th of March. There's 4 weeks into the Iran, Israel, US conflict, or it should be the other way around, Israel, US, Iran conflict. And the old theory is that gold goes up when conflicts arise and wars happen and all. But clearly, as you can see from, let's say, 1st of March or onwards, or even if you look at 2nd March, where gold was about $5,300 per ounce, it then just has corrected all the way down to $4,000 an ounce. That's a significant, correction, as we all would agree. A lot of people in the public were very bullish that it would keep going up. And if you look at it from the peak to its low, that was a correction of almost 26%, right? A 26% correction in the price of gold. That's obviously very, very significant. In um, share that I had done on, again, in some of the discussion groups, I had said that gold could correct by 30 to maybe even 50%. And well, if you take the 50% or more, and historically there is good reason, there is evidence that that has happened. I know this goes against many people's understanding and beliefs who are probably listening to this. But yes, there are many, 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 many instances where gold has actually um, fallen quite substantially, right? So let's look at the dollar side of gold, and then we will look at the rupee side of gold, right? In rupee terms. So 26% correction from its peak, and the conflict has not helped at all in terms of the gold price going up. This is, remember, the weekly chart. On Monday, 23rd, there was a big fall of almost 7-8%, and there was an intraday recovery. Last 2 days, there's been a slight bump up, but today, gold is again going down on the global markets. Now, obviously, a lot of people have this question, is this going down further? Or are we expecting, a recovery to happen and gold goes up? As per what the charts are showing right now, and this is, again, this is not a guarantee. These are just informed analyses and views. Anything can change at any time, but it's very likely that gold could perhaps go up, maybe, I don't know, 100, 200, $500, maybe even to $4,800 an ounce, and then perhaps correct again, right? Alternatively, the alternative view would be that gold, settles here for some time around $4,500 an ounce, and then drags down slowly, and then maybe goes back towards 4,000. Overall, I would say even if there's a bump up that happens on gold by a few hundred or two, three, $400, I at this point, technically speaking, that means chart analysis wise, I would not be looking for higher prices. Indeed, I would be looking for lower prices on gold. There is a leg down on gold, which is perhaps not yet complete, right? But again, these are just informed uh, decisions, right? Or rather analyses. At the same time, now, if we switch to the India side of gold and we look at India's gold price, right? And there we have it. That is the gold as priced on the MCX market. Now, some of you who are very astute would have definitely noticed that today's candle, right, is actually showing green, right? And there's a bump up here on gold, right? But the gold that you saw earlier was red candle, right? So this is the international price, right? All said and done, however, gold globally 1.5% down today. And today in India, as we speak, again, this is, remember the Indian markets are closed today because of holidays, right? And we have a 2% down price on gold, right? So India very clearly tracking the global uh, price. And to look at how much it has fallen in Indian rupee terms, okay, about 28%, right? So 28% has been the fall global, 26%, and 28% is the fall on the Indian side. Again, is this the bottom? Unlikely, as like I said, so we had a low of about, so this is the prices in for 10 grams of 24 karat gold. So from a price of 1.8 lakhs, we have fallen to 1.3 lakhs and then bounced back up to 1.44 lakhs. And right now we are sitting at 1.42 lakhs, right? Okay. So, uh, yeah. Market. So, okay, this is the MCX, right? So MCX trading going on, right? So that's why you're seeing a countdown timer here, and that goes on till 11:30 in the night, right? So these are live prices as you see on the screen. Like I said, this bounce, that if any, is more likely a short-term bounce. We may even go back to 1.5 lakhs per 10 grams, and then perhaps we continue down. But looking at it from a broader picture in the next few weeks, perhaps months, we are probably looking at maybe gold pricing coming to about a lakh per 10 grams, which is another about 15-20% lower from the current prices, right? So that would be the gold view. Doing the same thing for silver, just to make it a complete, because we all know silver had a fantastic run up, right? Silver prices in uh, April 24 were about 74,000 rupees a kg. From 74,000, it went to 4,20,000 rupees a kg, right? So that is what, a 6 times rise, almost a 600% rise. Let's actually put a number. So if you go from there to there, that is, yeah, right. So a 465% rise in, uh, yes, that's the gain, right? That has happened in silver. And then after making a peak at 4,20,000 rupees, the next day it fell by 27% in one day, right? This was also a call that we had made along with the silver call, or with the gold call, sorry, saying that silver was extremely overbought. That's the technical term that we have in markets, and very likely to correct, which it did. Of course, no one expected a 27% fall. I think a lot of people were surprised. And then after that, we had a further 9% fall and then a further 11% fall, all in one day. So 27% plus another 9%. So that's 36%. And then another 11%. So 47%, almost half, happened in 3 days, right? So that's how volatile the silver prices have been. Anybody who had bought silver is probably on that run up, is probably wondering what happened. Well, what happened is, if nothing else, a very sharp technical correction. Same question, is silver likely to go down further? The answer is yes, likely to. Guaranteed, no, right? But definitely likely to. And silver is down today 6.5%. You can see that on this panel here, 6.25% silver down. Day before yesterday, it rose by almost, how much? Okay, that was from an intraday low, it almost was about 7-8%. But as of now, you're looking at 6.5% down compared to Wednesday's price. So like I said, is it coming down? My view, yes, very likely that it is coming down. Where could it come down to? Silver? Well, technically speaking, where do we have some good support, reasonable support? It would be at about 183, 183 per 10, per kg. And then further down, we are also perhaps looking at levels closer to 168, right? May not happen very quickly. It could either be a gradual grinding down of the prices, or you just see a sharp turnaround, right? Even at 168, would I rush in to buy? No. Like always in the markets, you keep reviewing your review, and then you see what to do next. So for anyone who had bought silver on the run up and is still holding, my empathies, is just going to have to wait, or if it was a fine investment, may be something you want to review. Those who are looking to buy, hold on. I think lower prices are likely, right? So that's my broad view on gold and silver, right? Last time we did a bullion review, we had also very quickly done the platinum and palladium prices, and those have also gone down. We had made a call almost in the mid early 2025 that platinum and palladium would rise, which they did. Here you're looking at palladium, which went from 900, about $950 per ounce, all the way to $1,900 per ounce. And you looked at platinum. I was really telling this to some folks in the Middle East, where these things are much easier to procure, quite difficult to do it in India. And you're looking at platinum here, which went from $1,000 to a high of $2,900 before it has corrected back to $1,800. So that was the sort of returns that happened in the last 1 to 2 years in the bullion side. Of course, the last 3 months on all the bullion side have been brutal. 20, 50, 60% drawdowns have happened, and like I said, further drawdowns are also likely. Very quickly, to end with what is called the gold silver ratio, which was screaming a very strong recovery in the ratio. This is the price of gold divided by the price of silver, right? To make it maybe easier to track, we'll just make this the uh, a line chart. And as you can see, the gold price was 100 times the silver price. Okay. And then as gold kept going up, and silver also kept going up, but silver went up, as you saw, much faster than gold. This ratio kept falling to a multi-decade low of 47, which means historically silver was pricing itself far more than gold. So the only way for this ratio to correct would be for the gold price to go up further, or the silver price to fall down. Or let's put it another way, there are many options. Gold goes up much, much more than where it was. I'm talking about 6,000, 8,000, 9,000, $10,000 an ounce, while silver would stop going up or pause there. That would be one way for this ratio to correct. The other way for the ratio to correct would be silver to come down, which was the more obvious thing. Prices tend to fall much, much easier and faster. There must be an impotence for things to be going up, for the prices to be going up. But you simply need a lack of buying, not even, concerted selling. You just need lack of buyers for prices to come down. And that's basically what happened with silver. And the buying demand overnight, for whatever reason, just vanished. So you had silver coming down, like we saw, very, very significantly. And like I said, if you look at it from a purely technical perspective, lower silver prices are most likely, and so are more lower gold prices, excuse me, right? All right. So with that, wanting to keep this short and to the point, let's close the bullion market review here, and we will reconvene. And if you have any ideas, any suggestions, any collaborations, would like to, connect, you have my information on the screen. Feel free. I look forward to hearing from you and also looking at your feedback. To just put the disclaimer again, this is for information and educational purposes only, and this is not financial advice. I thank you for your participation, and I look forward to hearing from you. And in the upcoming other webinars we will do on energy, agriculture, industrials, US markets, Gulf markets, Forex, and commodities. Thank you.